Hello, everyone, and thank you for joining. My name is Rona Biju, and I will be your host for today's webinar. Before we dive right into the webinar, I would like to give a brief introduction about our company. ITC Accounting and Tax Consultancy is one of the top and most reliable tax agency firms in the UAE. In a short span of time, our team mastered how to give clients the best tax solutions. You can expect an uncompromised attitude when it comes to quality and professionalism. We deliver a sleek and professional outcome that sets us apart from the competition. With the leadership of Mr. Ahmed Sharfuddin, we've already positioned ourselves as a VAT and excise tax specialist in the market. We have a fast-growing team of qualified and dedicated professionals with innovative and commercial approaches to meet today's highly challenging business environment. By bringing the best team at your service, highly experienced tax and finance specialists in the industry, ITC will continue to create long-term relationships with various businesses by having the ability to deliver as exceptional service. As a testimony to our strategic and proven approach, most of the customers we serve are generated of referrals and repeated businesses. Moving on, I would like to give a brief introduction about our panelists for today's webinar. Mr. Mohammed Shasha. Mohammed Shasha is a seasoned tax manager with a remarkable 7 years of experience in the UAE's dynamic tax landscape. With a strong foundation in accounting and taxation and a keen understanding of diverse business needs, Mohammed Shasha brings a wealth of knowledge to deliver strategic tax solutions for a variety of companies across different industries. His dedication to professional development is evident through the completion of the VAT Compliance Diploma from PwC ATT and the UAE VCD Final Certificate Exam. Fluent in both English and Arabic, he possesses excellent communication skills. His tax record of meticulous attention to detail, combined with his proficiency in various accounting tools, makes him an asset in the accounting and taxation domain.
Hello, good morning, everyone. Thank you, Rona. I would like to thank you for attending this webinar. Today, we'll talk about automotive sector. As we know, the FTA issue many public clarification regarding that topic, as it's very sensitive and complicated. We will discuss some points on that webinar, which is the most popular cases in the UAE market. The first point will be the first subject, it will be direct sales. Second one, it will be trade-ins. And third, it will be price display. Fourth, it will be lease of cars. And finally, it will be export of sales. Our topic, the first one, let's start in the first one, which will be the direct sales. What is the kind of sales inside UAE in automotive sector? We have many kind of sales in automotive sector. And the first one is the outright sales or direct sales. Outright sales is the simplest kind of sales. It's sales within UAE, wherein the customer has resources available in the form of cash or borrowed from the other financial institution for procurement of the vehicle. On the direct supplies, we have to determine the date of supply. As this is the most important point on the supply. To determine the time of supply, you will need to look 4 points. The first point, it will be the date in which the car transferred to the customer. Second, the date on which the customer took the possession of the car. Third one, it will be the date of the receipt of payment or the date of issuing tax invoice. We will explain the first point as example. Let's say, which it will be the first point, it will be the date on which car is transferred to the customer. Let's say Mr. Ahmed will buy a car, but the car transferred to Mr. Ahmed in 30th of August, and the payment date is 15th of September. Supplier will issue an invoice, and supplier will issue invoice on 1st of September. As per automotive public clarification, the date of supply will be when Mr. Ahmed receive the car. Second point, it will be the date on which the customer take possession of the car. As an example or scenario, again, the date on which the customer take possession of the car. As we mentioned earlier, we will consider that Mr. Ahmed or Mr. Khalid went to the showroom to buy a car. But the car dealer put condition to transfer the ownership of the car on 30 of September 2023, and the showroom will deliver the car on 3rd of October. On the same day, the car dealer will issue tax invoice. So here, what is the time of supply? The time supply, it will be when on the date of Mr. Khalid takes the possession of the car. Date of and the last one or third one, it will be the date of receipt of payment. On this point, let's say Mr. Alex went to showroom, but he paid first. Then the car dealer agreed that he will deliver the car and the tax invoice after 5 days. So the date of supply will be on the date of receiving the payment. So let's say right now, if the tax invoice issued and the car dealer doesn't deliver the car or didn't receive any payment or he didn't transfer the possession of the car. So what is the time of supply here? The time of supply, as we mentioned, it will be the date of issuing the tax invoice. So we have here conclusion. What is our conclusion here? It's on the outright sales. To determine the date of supply, we should look to the mentioned point on the and determine which point had been happened first. In case where a contract for the sale of the car includes periodic payments or consecutive invoices, how to determine the date of supply here? We have to look to 3 points. The first one, it will be the date of issuing of tax invoice. So if the supplier issue tax invoice first, so the date of supply, it will be date of issuing tax invoice. Let's say the supplier received payment before issuing a tax invoice, so the date of supply, it will be the date of payment or the date of receipt of payment. But we have to put in our consideration the invoice must be delivered within 14 days. The invoice must be issued within 14 days of the date of supply. The tax invoice must be also delivered to the customer. Also, where the contract for the sale of cars involves periodic payments or consecutive invoices, the date of supply is the earliest of any of the following dates, provided that it doesn't exceed 1 year from the sale of the car. The date of issuing of tax invoice, the date when the payment is due as shown in the tax invoice, the date of receipt payment. It should be noted that where the date of supply is triggered because payment is made or a tax invoice is issued in respect of supply of car, that will only be due to extent the payment made or state on the tax invoice. And the remaining of the due tax on that supply will be payable as and when the further date of supply are triggered. We have to know that the tax invoice must be issued within 14 days. 14 days of the date of supply. Tax invoice must also be delivered to the customer. If we look to the screen right now, we will find the scenario. Mr. Ahmed, resident in Dubai, want to buy a new car from XYZ Motors. So, Mr. Ahmed live in UAE, and he also resident of UAE. He want to buy a new car from car dealership, XYZ Motor dealership. So, he chose the car sedan car model 2023 100, and the price is 100,000 plus 5% of VAT. Our calculation, the taxable amount is 100,000 and the VAT amount is 5,000. So the total amount, it will be 105,000. So who's responsible here to pay the 5,000 to the FTA? The responsibility of paying VAT to the government or to the tax authority is the XYZ Motors, which is a car dealer. We have conclusion here. So what is our conclusion? our conclusion is in the direct sales example, Ahmed pays the total amount of 105,000, which include both the car price and the applicable VAT. The dealership is obligated to account for the VAT and fulfill their tax responsibility in accordance with the UAE VAT regulation. Trade-in is a second kind of supply called trade-in, and it's popular in UAE market. But what is the meaning of trade-in? Trade-in meaning that you will go to the car dealer to replace your old car with another car or with a new car. On that scenario, you will find the VAT is complicated. So what will be the VAT treatment here in this case? Before explaining the VAT treatment, we need to understand the type of transaction. We will separate the sales transaction so we can understand the VAT treatment, and the separation will be two ways. The first one, the 2 points. The first point, it will be sale of the new car to the customer, and second one, purchasing the old car from the customer. After separation, we found that the supplier purchased old car from the customer and sell a new car. And the scenario here, let's say Miss Sarah owns the old car, went to replace it with a new car. So she went to XYZ Motors to replace it. So what is the treatment of that here? First, our first step, it will be the separation. Selling of the old car, it will be taxable if the owner are registered. And the second one, it will be selling the new car with amount 100,000 and the VAT treatment will be 5,000. But how the payment here will be done, or how it will be calculated? The customer and the car dealer agreed to deduct 30,000 dirham from the new car price. At the end, Sarah will pay 105,000 included VAT less 30,000 dirham. It will be equal 75,000 dirham. And the VAT here, it will be 5,000 dirham should be reported to the FTA. Most of the suppliers inside UAE thought that it's a 75,000 is a taxable tax, or the 70,000 is the taxable amount, which is totally wrong, because the taxable amount here for the new car, it's 100,000. So the VAT will be applicable to this amount, it will be 5,000. Again, who's responsible here to pay the VAT to the government or to the tax authority? Who's responsible here is the supplier. Supplier should report or pay the VAT to the FTA tax authority. Here, what is our conclusion? Our conclusion in the trade, in this trade, in example, Sarah received a trade-in credit of 30,000 dirham for her old car, which is deducted from the price of the new car. Sarah paid the remaining amount of 75,000 dirham, which includes VAT. To complete the transaction, XYZ Motors handled the VAT payment associated with the new car as per UAE VAT regulation. The price display, car dealer is obligated to display the price inclusive of VAT. On this way, the customer will know the exact amount he needs to pay. As an example, the car price is 100,000 dirham. So the VAT will be 5,000 dirham. The display price should be shown as 105,000 dirham, clearly stating that the price includes VAT. However, there is two cases, the prices no need to be inclusive of VAT, or no need to mention it's included of VAT. The first one, the export. As we all know, the export is zero rated, so no need to mention it's included of VAT. If the customer are registered, in this case, the car dealer must state clearly the prices are exclusive of VAT. Our next subject is lease of car. It's normal for vehicle dealer and car rental companies to provide leasing services to both residents and tourists. This lease could be in short term or long term. In both cases, it's taxable and subject to 5%. To determine the tax amount, we should determine the value of supply. What's the meaning of the value of supply? The value of supply is the amount received or expected to be received for the lease, less the tax amount. There was some supplier in UAE don't consider the lease as not applicable for VAT. However, they charged their customer for another component of fees charged by them and account for VAT. The car dealer charges their customer in two ways. Lump sum, let's say Mr. Alex charged his customer with 3,000 dirham per month, including parking and selling penalties or traffic fine. So total amount will be applicable for VAT. Let's say it's 3,000 dirham, included everything. So the 3,000, it will be all applicable to VAT if he didn't mention any details on the invoice. Second way, on other case, car dealer will issue an invoice and the invoice will be in details, which mean that he will mention rent, he will mention selling fees, he will mention traffic fines. So here he have to charge VAT on rent, he have to charge VAT on selling fees, but traffic fines, as we know, it's not applicable to VAT. So what is our scenario here? Our scenario here, as it's shown on the screen, Mr. Ahmed, resident of Dubai, wants to buy a new car from XYZ Motors. So he decided to lease car for 1 year from XYZ. He chose the car, sedan car model 2022, and the price per month, it was 3,000 dirham without VAT. The 3,000 dirham, it's all applicable to VAT. As we mentioned, if it's lump sum, so the total amount is 3,000 and he will apply VAT on this amount. What is the calculation? Calculation here, total lease amount for 12 months exclusive of VAT. Monthly lease amount, it will be 3,000 dirham. So the total lease amount yearly, it will be 36,000 dirham. What about the VAT amount? VAT amount, it will be 1,800. So the total amount he will pay, it will be 37,800 for 12 months. And this amount, it will be included of VAT. On the other hand, we have to look who's responsible to pay the VAT to the government or the tax authority. The responsibility here to pay the VAT is the supplier, the supplier who is responsible to pay the VAT to the FTA. Our conclusion here in this example, Mr. John leases the car for a specific duration, and the monthly lease amount is subject to VAT. The total amount he pays includes both monthly lease and the VAT. XYZ Cars Rentals is responsible for paying the VAT to the government or to the tax authorities. Second scenario, motor vehicle trader XYZ leased a car to tourists for 3 months. The customer regularly used one of the toll routes, which we call it salik, being deducted from the vehicle account. The lease contract stipulated that the cost of salik will be recharged by XYZ LLC to the customer. The salik deducted from the account is essentially a cost incurred by XYZ LLC to provide car leasing services to the customer. The recharge of such a cost is subject to VAT and should be included in the taxable value of the supply. For export, our last subject, it will be export of cars. Export, we have two kinds of export. As we know, there is direct export and there is indirect export. Direct export, it will be export by trader. which will be under zero rated. But we have some condition to be satisfied and we can include it under zero rated. The first one, the car are physically exported outside UAE. Official and commercial evidence of export should be valid. What about the indirect export? Indirect export also, it will be under zero rated, but it should be, there is some condition should be available. The first one, the car are physically exported outside UAE. Official and commercial evidence of export and the custom declaration, it will be available. The car aren't used or altered on the time between the supply and the export. What about the document we need to be, it should be available, so we consider this when it's export. Official evidence, exit certificate or similar documents evidence for the export. Commercial evidence, airway bill, bill of lading, and custom declaration. This was last topic in our webinar today. Thank you, Rona. Thank you everyone for joining the webinar, and see you all soon on a upcoming webinar. Thank you so much. Thank you.
Thank you, and a big round of virtual applause for Mr. Mohammed Shasha for sharing his expertise and insights with us today. Your valuable contribution has truly enriched our understanding. Thank you for joining us and sharing in this enriching experience. Your presence and active participation have truly made this session valuable and impactful. We look forward to connecting with you again in our future webinars. Until then, for any further queries regarding excise, VAT, or corporation tax, kindly drop us an email or give a call. The details are mentioned on the screen.